$5,000 an ounce. Who thinks that's a good thing? Okay? Who thinks it's a bad thing? Who just doesn't know? All right. What it is that's exactly why you buy gold. Because if gold goes from $1,300 an ounce up to $5,000 an ounce, what it means is that the U.S. banking system has collapsed and all of your assets are virtually worthless. So what have you done? You've hedged yourself by owning gold. And that's why you own gold. That's the simplest way that I could possibly explain it to you of why you own gold. If you don't own gold, yes, you should own gold. Now, there are Canadians in the room, so I just want to touch on a few current stories. What was the big takeover target in the province of Saskatchewan that the government of Saskatchewan and the Fed said no? Okay, and who was going to buy them? A big Australian firm. What's it called? BHP Billiton. So they were going to buy potash, and as a capitalist...
Does anyone know what potash is? Yeah. Right.
Okay.
I didn't know what it was.
So what happened is the government said no. Now, why did the government say no in Canada? For the Canadians in the room, I want you to know. And for everyone, why did they say no? What? Yeah, partly foreign investment. Keep going. Why did they say no? This is so important. Because they were concerned of two things. The jobs would be eventually shipped all out of Canada. This is one of the largest companies in Canada. Okay? The jobs would eventually, and we don't have a ton of massively large companies in Canada. The jobs would all be shipped offshore, and eventually they felt that the tax base would be depleted hugely in Canada. So as a capitalist, I was disappointed. As a Canadian, I was happy. Because what it said is Canada is not for sale. And it is a little bit difficult and a little bit of contradictions from a lot of how I think a lot of times. But it also said that research in motion and agrarium, which are two also huge targets out there, are not for sale. Now the reason right now the companies are targeting takeovers around the world is because the balance sheets generally of corporations, major corporations around the world, have become extremely strong. And they have massive stockpiles of cash. So the investors or the shareholders are saying, either do something with the cash or give us our money back through dividends. The last thing that the executives of these firms want to do is give money back. So what they do is they go out on a massive acquisition program. And that's what's going on right now. That's why you see all this mergers and acquisitions. It's not creating new jobs, but that's what's going on out there. Now, the dollar is at par. As a matter of fact, last week it slightly went above par. What does that mean to Canadians? Is that good or bad? Well, it's good and bad. If you love to travel, it's fantastic. If you're down here in Vegas, it's wonderful. If you're buying real estate here, it's superb. However, the bottom line is it is destroying the export and manufacturing sector, which exports 80% of its goods to the United States. So now, what we have in Canada is very interesting, is we really have a tale of two cities. We have commodities, which are in a massive bull market run because commodities are priced in US dollars. As the US dollars drop, commodities become less expensive. As they become less expensive, there's far more demand. So Canada is a commodity-rich country. It is booming in that sector. On the other hand, in central Canada, the strong Canadian dollar is annihilating the export sector and the manufacturing base. So that's what's going on in Canada. And they're not, although they did have some inflationary concerns in Canada, and the way that they curb inflation is they raise interest rates. Well, they are not going to raise interest rates because the US, or the Canadian housing market, is not showing a great deal of strength. So let's bounce back down to America quickly. Let's talk about the US housing market. You can still make money in the United States in the housing market, but you can take a city like Vegas. You can get your head handed to you on a platter. You can make a lot of money here. Now, on that sheet, the reason I handed it out, those are about 130 some odd houses that I bought, renovated, listed, and sold with every single expense that there is. And I'm 130 some odd for 130 some odd profitable. Okay? That's rebuilding. Part of the reason I tell you that too is because, you know, there's a lot of people who go around and they say, my house is worth less than the mortgage, I lost my job, I'm unemployed, and they feel sorry for themselves, and there's a sag, and there's a tail, and there's all this. I don't. My hole was a hell of a lot deeper than anyone in this room. But I show you that because it's a comeback story. I don't say it out of any arrogance because I think at the beginning I made it very clear that I made a big mistake, but it is a time of rebuilding. And so no matter how deep your hole is or how depressed you might think you are, there's a massive opportunity out there. Now with the U.S. housing market, it's going to be a long, slow recovery. And there's a number of reasons for that. Unemployment is still hovering at 9.6%. It hasn't really improved, just slightly month over month. We're going to be several years into this. The other problem always that I see, and one problem as well, back when we looked, if I look at a 200-year cycle of previous recessions, it would take years to recover. The American public now, through television and media and internet and everything else, demands a turnaround in 6 months to a year. That's just the way it is, right? And it's completely ridiculous, and that's part of the reason, that's part of the problem that we have here in America, is everything has to be done so quickly. And it is a cycle. It is going to take a lot of years. And does anyone remember, and some of you I know subscribe and you read my newsletters, but as soon as Obama was elected, the first newsletter that I wrote, what did I say in that newsletter? Does anyone remember? Yes. That he'd be a one-term president. And he came out with the best numbers ever of any newly elected president, the highest approval rating ever of any American president. So I wrote that because, not because I thought he was good or bad, it had nothing to do with that, because I simply looked at the economy. When the economy is doing extremely well, even if it has very little to do with that president, he's re-elected. When the economy is doing extremely poorly, no matter how talented the individual, he won't be re-elected. And that was my point. So there's a number of things, and you know, I just wish I could be here for hours and hours and hours, because there's hours and hours and hours and hours of stuff to talk about. But I do want to touch on a couple of quick things, because there's a lot here, each of these two. Thank you. Okay, so a couple of takeaway points right now, and then I want to talk about the event that Bill and I are going to do. First of all, the market is still in an uptrend. And what I basically say is, okay, I got to explain this so you understand it. 50% the market could go down, 50% the market could go up. But don't stand in front of a freight train. What that means is, right now the perception is all is good, and the markets continue to go up all the time. And so with the low US dollar and low interest rates, the markets are going to continue their upward path. What will quash that? If the US dollar rallies because the Congress and the Republicans start to have a much stronger say. It's kind of funny, people are so supportive of the Republicans. If you're in the stock market, actually, and they get what they want, which is austerity cuts, which is actually good for this economy, in the short term, we're going to see a major market correction. And that's why I go insane when I hear people up in front of a room talking to hundreds of people where they say unequivocally the market is going up, or absolutely gold is going down. They're full of hogwash. They really don't know. All I can tell you is, based on all the market indicators that are happening right now, this is the direction that will take the economy up, and these are things that can happen that drives the economy down. So the key is always to be tuned in, always to be interactive and listening. One thing I do every month is I take my students and my mentorees and I keep them up to date on what's going on in the world and the economy so that they can manage their affairs. Now, here's just a couple of quick things. Forget carbon emissions companies completely, because the green capture tax is definitely going to be gone, so you wouldn't want to touch that. Silver is better than gold right now. Silver is a much better buy than gold. So if you don't own any silver or gold, I would definitely more move towards owning gold or silver for a very good reason. During times where commodities move up, silver is considered a commodity because it's still used industrially. What typically happens is silver will move up disproportionately higher than gold, and it's still considered a precious metal, and it's still a hedge against the decline of the US dollar. So I would buy silver definitely. And I remember when I talked originally many years ago when gold was $300 an ounce, I said have 20% of your portfolio in gold. Who's in the room remembers me writing that? Okay? Couple right over here and here. And so that was what I said, and at that point I was criticized and everything else, but look at it today, $1,300 an ounce, because I talked about having a huge hedge at that point. Avoid banks. Avoid banks, avoid banks, for very good reasons. Very, very good reason why you want to avoid banks. The first one is due to what's referred to as the mark-to-market rule. And let me give you just a quick example, and this will hit home on what mark-to-market rule is. I go to the trustee sale, the auctions, where I buy these homes. And what happens is I'll get a condo up there for $40,000. I'll buy it for $40,000 in the bidding. It's a 2-bedroom. The next day, I'll see the exact same condo next door, and the opening bid is $140,000. No one touches it, no one buys it. It goes back to the bank, and they put it on their balance sheet at the future value of $140,000. That's how cooked the bank's books are. The other reason is the massive lawsuits. The US dollar is likely going to continue to move down, more likeliness to move down, which will be great for the market rally. However, if it does turn around and we see austerity cuts here in the United States, be prepared for a major correction. So, a little on my past. I'll just ask a couple questions because I know people like Eric have been with me forever. Who remembers when I said when uranium was under $8 a pound, buy heavy, heavy, heavy? Raise your hands nice and high. And what did uranium eventually go to? Does anyone remember? Hovered right around $120 a pound. That was kind of where I went from small to big. That was where a lot of people made a lot of money. They did a story in the Globe and Mail. I created several multimillionaires who followed my teachings at that time. Live at a meeting at noontime in Calgary, I picked several stocks, 13 stocks, and every one of them went through the moon. And that's where I got all the attention and really grew, and that's how the organization started back then. I talked a lot about buying gold at $300 an ounce, 20% of the portfolio. I was criticized, but it's certainly shown we've gone in the right direction. I talked at oil, and I've done lots and lots of talks about oil supply and demand, and at $20 a barrel when no one was paying attention to it, why you should heavily invest in oil, which we did. We made a fortune. Now, that isn't an arrogant point, because I also said very much how we got very, very hurt in Alberta. But what I'm doing right now is I'm very involved in Las Vegas. I moved to Las Vegas for one reason. The cash flows are better here than anywhere else in the United States. Not only do I have this sheet here with the results, which is most important, but I bought 56 condos here. I have 4 in renovation. Of the remaining 52, all 52 are rented. Now there's somewhere about a 12% vacancy rate here. So those are very, very good numbers, and I have a waiting list. And so that's the type of thing. And the people who are involved with me in the program, like Eric, I send out a check every 90 days to them. And the cash-on-cash return that I send out per year is somewhere hovering in the 9 to 10% range. But these are units that used to sell in the $160,000 to $250,000 range. I'm paying right now $35,000, $45,000, and $55,000.